Good morning, everyone. This is Tom Aspray. Thank you for joining us this Saturday morning. Today's discussion, if you will be about uh, pivot point analysis and how oftentimes when you transition from one month to another, it can give you some important information about new entry points or exit points for that matter. So I'll have, I have a number of slides prepared, and of course, welcome all the questions. Those of you who are not familiar with stock charts, I just use it because it's very inexpensive and it has pretty good pivot level analysis. For those of you not familiar, so if you have a daily chart in stock charts and you add the pivot points to a daily chart, you get the monthly data. So, this is a chart back in time, but so 1 month's pivot points are determined for the prior month's data. If you go to a weekly chart, then they use yearly data, which is also pretty interesting. I have, in fact, I recently published an article in Forbes.com that looked at, I think I can get to it quickly, some of the yearly pivot analysis levels that are oftentimes, quite illuminating. So, if we look at this briefly, let's see. I think Amazon was one that was pretty. Microsoft. Let's see what I have no idea what Microsoft is. So you can see that in 2020 we were up above the. This is a weekly chart of Microsoft. Solid purple line is the yearly pivot. R1, R2, S1, etc. So even in 2020 we surged up above the yearly R1 resistance. During the March collapse, we actually held the pivot level. Okay. And also we had so we pretty positive. We opened the year, pivot analysis, nuts and bolts, if you will. If you start the period off and you're above the pivot level, whether it's monthly, whatever you're following, weekly, or yearly, it's a positive sign. So Microsoft started off in 2021. At this point A here, we got up to the R1, and looks like that was early part of April, pulled back here to that 240 level. And now we're, look like we're going to challenge the R2, which looks to be about 290 something, 294 maybe. So anyway, it can be quite helpful, in developing a game plan. Basically, part of what I try to discuss in my publications and on Forbes, as well as in my teachings, is how you can sort of accumulate data that'll point you in the right direction. So let's go back to that chart I hopefully can still find. Okay, XME. So I put some classword sort of examples, which I tend to take my students with. So this is a chart of XME. I've highlighted this period in February. Most of you know sort of the analysis. This dashed red line is the equivalent of the Stark bands. So up near the upper bands here, high risk time to buy, low risk time to sell. Down in here, we had a doji down here with that low at 2106. If you can see that, that was a low risk time to buy and a high risk time to sell. So I look for transitions in the indicators, from going from neutral in this case to positive. So, they're in red here. We have the relative performance, measures the ratio of this stock or this ETF in this case to the S&P. Doesn't tell you the direction. It just tells you whether it's performing better. If it's rising, it's outperforming the S&P. Falling, it's underperforming. Why is that important? Well, usually in a strong market, so those stocks that are outperforming the S&P will gain more than the S&P, and also when they correct, they'll correct less. So it's important to notice, and we'll point out a lot of times in today's talk about why transitions in the relative performance can often be a sign that you should be getting out of the long side, but it doesn't always work that way. So we've highlighted this bar, I guess it was February 22nd, when, the RS, had broken its downtrend, pulled back to its moving average. Both the RS and down below the unbalanced volume were clearly positive. We got up to that upper band high of around 2970. And, Manning Solar, who developed the Stark bands, really developed this as a way to not take stupid trades, basically. This action was so strong, and I'm sure there was something in the press that would have supported that the miners were going to go through the roof. And what happens? We get a sharp 2-day drop right back into that pivot level. Okay, and that's the new pivot level. So you can forecast it as of the first day of May or of March. In this case, you get the new pivot level. Some platforms will allow you to calculate it in advance, but you can see we drop back into that pivot level several times before we started to push to a new high at 41.75. By the end of the month, that pivot level again became important resistance. The difference then was now when we came down here in the early part of March, the daily studies were positive. When we came down at the end of March, not so much. Both the RS and the OBV were negative at that point. So we developed what could be a trading range here. Let's go to the next forward in time. One of the things I like about stock charts is it makes it very easy. Down here, you can adjust the periods, the start and the end periods in this case. And so, that was the case. So we were talking about this high at 41.75, the drop down here, the daily studies were negative, and we started to move sideways through most of the April period. So let's look at what the chart was setting up for us. So we had, I'll change that to blue. And, we had a nice flag formation developing here, or you could draw it for me. And more importantly, the daily technical studies, they started to bottom out and turn higher. So the unbalanced volume, I looked at the unbalanced volume and the RS to see what they did the last time we made a new high. So they were looking pretty strong. So you can use this sort of chart formation to help give you targets. So the more ways you can come up with a price target, either on the upside or the downside, I think the more confidence it'll give you. So we went from 41.75 down here to 35.64. So let's call that $6. If you measure $6 up here from just above 41, I don't know, 41.40 or so, you get right around 47.40. Well, we got a high here of 47.75. That was confirmed by the RS, but not by the OBV. But you still had a breakout. You're going into now we're in May. Oftentimes you can see in May we exceeded both the R1 and the R2. It's a little hard to see. The R2 is right here. So when you have a couple of months in a row that you get well above the R2, then I start to look for reasons to be maybe a little more cautious. So as we got into this date of this chart is, let's save it as it is, was the 16th of June. We sort of have, a trading range, and then we start to see some deterioration. The RS drops below its moving average, and the OBV, is diverging. Made a high here, 47.18, higher high, 47.75, lower highs. So with this, you can see a big volume down. That suggests that, okay, maybe we're going to correct. Then, if it's a market that you've already made money on, you might want to look at that correction and say, well, okay, where are the likely places it's going to correct to? So let's look at a more current chart. Here was at 41.75. We turned out we made a secondary high at 41.67. And we got right back down this 41.42 and down as low as 38.65. So then again, the daily studies were negative throughout that period. So that was not like, I usually don't short ETFs too often, particularly not this one, because it's sort of specialized. But, this is a current chart. So now we've had this long period, from this high here that we had some divergences, in early June. Now it's in the early part of August. So the question is this market ready for a turn? Well, we surged back above the July pivot at the end of July, and now a pull back in here. So you can, we'll clear this up so you can look at, now we know that 43.17 is where the new pivot is. So this looks pretty interesting to me. For traders, I'm on the long side. I'm looking to buy it even a little lower. And
conference call right now till about noon.
So hopefully we've muted everybody. If you aren't mute, I would appreciate if you would. So it will be interesting. It popped its head up. It was up 2% on Friday. Looking kind of interesting. The volume picked up. So clearly, I want to see the RS move above this peak and the OBV move above that to suggest another push to the upside. Then, based on, if this low does hold, then you kind of look at 47.70, up to 50.41 for an upside target. Obviously, the prior highs here would be also a target. So, in the 42, 43 area, you've got about a 10% move, sort of the minimum if we just get back to the old highs, or you have more like a 15+% move, which is more like what I would generally like to see. So let's look at another example using XOP. It's one of my favorite markets. I've had good success with it for the most part. In fact, I was pondering on Wednesday whether I should buy it, and I looked at the technical studies, and there were no real signs on my stuff that it was going to turn higher. Of course, it was up 4% on Thursday, which that often happens. And if my indicators are right that it's, it may be the early stages of bottoming, but not yet. So we'll kind of take you through, a whole cycle just to get you an idea of how the pivot lines can help you, get on board a market that's moving nicely. So this chart is as of early December, I guess, December 1st of 2020. And, so you kind of, you look at, I advocate drawing a lot of trend lines. So when I'm teaching students, I'll send them a chart without the trend lines and tell me what you think. So, based on my stuff, this is a really strong move and suggest that, okay, we should be looking for a pullback, to be a buyer. So if we fast forward, you can do it any number of ways. You can go like, okay, well, what happens here? We go by a few more days. This is the 4th of June. And now we're getting in here. When I start to see this sort of formation, it's a sign after this day that, we probably aren't going to get back to that pivot, and we're probably going to hit up to the R1 because the OBV is looking very strong. So if we push through, oftentimes when a market has made a significant low, you won't get in that first move up. So this is that first move up. We got up to this, we got down here to 52.58, pushed up to 63.25 a week and a half later before the market consolidated. So sometimes there were some good signals right around in here, but after that it was sort of dicey. It's all a matter of risk and reward. So you're coming to this period, which is now January 4th, the start of the new year, and you kind of you're starting to see some times that okay, well, maybe the worst of the correction is over. You can look at some sort of a flag formation here potentially. I'd like to have a better spread in points to suggest that was the case, but your indicators are holding and basically positive, so that's good. And the major breakouts that we already had and we discussed, they're a positive sign. So there are some encouraging signs. We're back right around the pivot for January now, first day of trading there. And you can see there's a low at 56.58, 55.49, and we're trading at 58.55. So roughly about $3 above this low here, which I would think would be a low that should hold. So let's fast forward a little bit here. Okay, so now we're same time period, just a different spread, so you can see a little bit more of the price activity. So 55.49. When I look at stops, I wouldn't use this one for sure. 56.58, 55.49. Depending on what kind of entry, I'd use that something below that, or I might even go back to this, which is 54.14. I like the fact that the volume picked up as we moved above these couple of periods high. You can see the RS has just turned positive and the OBV is close. So, if we next day up turned out was a gangbuster, high volume. Okay. So, then your question is, okay, well, what do you do? Well, you've just completed this correction. So, about the only thing that might give you a better entry is the fact that, we had a high of 64 and closed at 62.31. So, that means that you could pause for a little bit, maybe, I'd look at the entry above this high, say 61.32 or something, down to obviously towards the pivot, which is, 57.95, as a level to get in. And of course, then you have to do your risk analysis and see whether that, makes it worthwhile. Right. The start of January here. Let's see how it transpires. I think it'd be more. So you got a whole new push to the upside, up to a high of 71.89. And then you start to tail back down. And once again, the RS starts to, drop a little bit. Just a normal pullback. So 71.89 down to 63.41. As we get into February, we're right back into the pivot level. So then you can look at, this low of 62.73. The new pivot is 64.42. So you're kind of right in that range. That's good support. Somebody asked me in the chat line, how do you plot the bottom two charts? And you can see down here, we have indicators. We have price, the symbol are SPX. I think there's a video on YouTube about this, how to set up your charts. And so this is the relative performance, measuring the price of this ETF and XOP relative to the S&P. I run an exponential moving average, a 21 period, OBV, same sort of thing. So, it's a basic. So, we get down here. XOP is a market that can really move, but, as you can saw back here in early January, as well as in early February, it turns pretty quickly, so that we had a nice little pullback here, one up day. This second day here, we opened at, up, we closed at 65.07. We opened at 67.01. So we gapped higher, traded back down to 65.40. So we never made it down to the close from the prior day. And then it was, a big move up. So I try to target, I use limit orders pretty much. So when I see, this sort of move here, I will often look to see whether, use it to, judge or, hopefully get a new entry level that's favorable in terms of the risk reward. So here we are, February, pivot here. January, held the pivot, a nice push to the upside, and got up to, I guess a high of 91.49 in March before it started to tail off. So then, you see this, we're getting up to, so let's review, February, we exceeded the R1 and the R2. March, we exceeded the R1 and the R2. So February, or March rather, we exceeded the R1, didn't get up to the R2 here. And you start to see this sort of, I look at, the daily action, a high of 90.71, 91.49. Back in here, there was a bigger spread between the new highs. We had 78.94, 91.36, 84.94. So it's a sign of a little loss of upside momentum. I think we probably, if we looked at an hourly chart in this period, you'd see some other erosion. The other part is the problem that the volume was declining as we made a new high. So, that was sort of a sign that, okay, well, we could see more of a pullback from after that action. First level would be 76.14. But after this sort of move, you have to also I'm a firm believer. Yeah, often when I talk to a client or student, I say like, they're in a stock and it's up 25%, and I ask them what their strategy is, and they say, well, I think it could go another 25%. And well, is that really realistic? If you've gone from 55 to 91, in 2.5 months, that's about, my math is correct, that's probably about a 85% move in 3 months. Well, I can pretty much tell you, if you look at the entire history of XOP, a 80% move in 2.5 months is not very common. So I do throw that into the mix and say, well, okay, maybe you're getting greedy, and being greedy in the markets rarely works. So we did start to correct. I think we were right in here, came down to the pivot. And those of you who look at chart formations, I hope you'll see. So I've highlighted some of these areas where we came into the pivot both times. Let's look at what we have here. So this is as of the end of the 3rd of May. So we just started a new month. And many of you'll know I'm a big fan of flag formations or triangle formations. And if you look at the overall market, I think I wrote a long article. You see a period like this in the overall stock market, you can see that it serves to change the sentiment. I was talking to someone, I don't know if it was about with Neo or Square, about, as it peaked in December, January, you could find tons of articles about how bullish people were on the stock. And then after it went sideways to lower for 2 or 3 months, nobody is recommending it. In fact, then you start to see some bearish articles. So it serves a purpose. All the people were gung-ho about XOP up in here. They may not have seen this sort of lower volume pattern in here. And, and then the volume increased, as we started to decline. That's not a great sign. Daily studies really didn't turn too negative. I mean, the RS, formed a downtrend. Well, we just broke that downtrend. The OBV, was quite strong, and the weekly OBV was even better. So, we surged above, in the end of the month, back up to the May pivot. And now, with a low of 79.69, the pivot for May is up here, if you can see, is 79.11. So we're getting right back into that pivot. So then, you kind of look at this flag formation. I've talked about time, measure it in a couple of different levels. Let's see, you probably should extend this one up a little bit, get a little more accurate. And you look at, I tend to measure it a couple places at least. So, roughly this is from 74 to 89. So that's $15. And this one's from 76 to 92. So that's 16. You measure up in the breakout level, gives you a target of, 96 or higher. You add it on to 80, you get a target of 96. Well, the R2 is at 92.70. So if you're developing a strategy and you're saying, well, okay, I'm going to try to buy the 85 or the 88 calls or something, that if you're right about the market, those options should do well. So let's, try and take it forward a few periods and see what indeed did happen. So pretty bullish action. When you start to get the OBV didn't really materialize. The relative performance was doing a good job. And it took you a while, and in fact, all through May, you never made it to that target. But then, at the start of June, you surged to the upside and got to 94. I think it almost got up to 100, as I recall, but I'm not sure. And you can see up 99.63 before, once again, it started to, weaken here, and the RS pulled back. So then you're kind of looking at, well, okay, 86 on the downside is the pivot, but once you had a good move, you went from 72 to 99. So, you can look at just basic fib. You can say, well, okay, that's 27 points on the way up. So half of that would be 13 and a half. So you take 13 and a half off of 99.63, you come right back into that pivot at 86 here. So a 50% would be back in that realm. So let me see early flag. So right now, let's we go into current history, see what we look like now. You can see we got a pretty deep correction, much deeper, right back in there to support. And as we start out the month of August, this was as of, this must have been as of like the 4th. This will show you what it looked like on the 4th, the 5th. So, the 4th. So this was that big up day, but that 78.88, I saw no reason to be buying it, So, I mean, most of my technical stuff still needs work. I mean, it would take 3 or 4 days probably for the OBV to turn positive, the same as the RS. So, it's going to be a time thing, before we see an opportunity there. I tend to try to stay with markets that I do well in, so if I find a market that's, starting to, sort of, perform, one that's really good, but actually I got out of the last part of it too early was PerkinElmer. So, as most of you know, I don't really pay much attention to what they do. This happens to be a medical equipment device maker, I believe. But I like to see, we saw a pretty good move. I look at both the weekly and the daily. So let's see. Maybe we can see if we can. I'll probably mess this up, but let's see what we can see. So this was the weekly chart as of the 6th of June. And, the OBV was positive. It was looking stronger than prices. We'd gone up to 149 down to 137. So we're sitting right on that 20-week EMA, which I like to see. And, if we were to go way back in time, if we have time, you can see we had a really nice basing formation. So, things looked, the weekly chart suggested that, this rally up here, this pullback probably created a pretty good opportunity. We dropped below the pivot for June, but there was really good support around 136.34. That was the prior high. Resistance becomes support. And, the daily studies are in the process of turning at that point in time. We go through, advance a little bit. You can see, 5 days later, the RS turns positive. So the way I look at the RS is I look for a trading range and a move out of that trading range to suggest that a market's becoming a market leader. So that happened in May. So, that happened early on in that rally. So even though, it pulled back, I focus on, this peak there. So it was looking pretty encouraging. We had quite a rally up. And so then, you'd be looking, if you weren't in, you'd be looking for sort of a pullback towards the 20-day EMA, which was at 141.50. And the pivot was at 140.24. So that's sort of your range, At that point, your stop at 137.30, would have been okay. But that meant you really needed to have, an entry somewhere around that 141 to keep it under 5%. So let's save those and go fast forward in time. So this was as of June 11th. This is July 9th. You can see what happened. Not much of a pullback. We got a little consolidation in here, but that's about it. Nice push to the upside. If you look at, the move from 126 to 149, 23 points, and you measure up from 137, you get 160. So that was sort of your target. This is sort of a classic ABC type of correction pattern here. Once again, the RS, has weakened here. So that could be sending you a message. OBV looks really strong. So when I see this, I usually go with the OBV, because the volume pattern is very strong. And I would look at, in terms of upside targets, I'd probably look at, okay, let's see if I can draw some lines here. Something like, a trading channel. So we're talking about 160, and we can see that the R1 is at 161.80. The R2 is at 169.70. All right. So that's all pretty good. Your support level will be 47.80. I think I used a stop. I think we sold out part of our position and got back in. You wouldn't want to see much of a break, below this level. So that pinpoints your parameters, and then obviously got to watch the RS, because you want to see if it rallies, you want to see that the RS does indeed, improve. So a couple days later, not showing much improvement. Okay. Now that was the 9th, I think. So now it's the 16th. Now it's looking even better. And that new pivot at 149.55 appears to be holding. And, takes off greater than my expectations. I think I sold out the last part around 173 or 74, and it got up to 182. But you can see the RS did pull back. It took some time in here, but the OBV was giving you the right picture of things, and hopefully kept you on the long side. So so it's the salient point being, after the bottom was here, there was really a lot of good reasons to continue to focus, even after this push up here or this initial push, to focus on the long side of that market. Sometimes when you see the RS deteriorate, it does mean something. We were in American Airlines back in May. Got a nice move. I think we're at 22.49 or something. We bought, sort of, I don't use orders right at the pivot, right? But, close to it. So I think it was 22.42 or something. We had a nice move up to that R1. So it was about, a $3 move. So it was greater. It's about a 14% or something. I remember this one, it was a Wednesday, and one of my clients was smart enough to get out near the high on that day. I got out on the next day of half the position. I was, wanted to see, oftentimes when you get a big surge up like this, you'll get another day or two, particularly relative to the Stark bands, you get a move. This was above the Stark band, and you get another push, so it's like a 3-day sort of thing. So after I see the second day, then I pull the plug on half. When I saw, that big a move, I said, okay. And then I didn't like, some of the technical action. So I took half the profits here, let the other half run, because I thought it was going to be, a pullback that would probably hold this 23.94 area, this prior high. That was, we got the first sign of trouble was this bar down here. We got below that 23.94. So I think we got the last position, we took 5% profit out of, we're out of the market. Even into this point, I thought there was a chance it was going to bounce out, but, you can see the technical studies, the RS turned negative, and it just kept getting worse, you can see that the OBV tried to flip back to positive, but the RS, was the better, indicator in that instance, because it just stayed negative. So, the falling RS is just never a thing to really fight against it. So it's one thing I watch if I'm in a position. You can see it's, we're going to July. Nothing's really, we had a couple of rallies, but you can see the on-balance volume ticked up to its moving average, failed. Got a big rally, last week, but still no real signs, that the airlines have bottomed. Of course, that, now we're up to current. So I'm not really interested in the airlines, but if I do have clients that, either work for a company or have a vested interest in trade, and that'd be kind of the level I'd be watching on the RS to see if, you know, if there was a turnaround. But there seems to be a lot of work there, you know, in that period. So somebody asked me about whether the crude oil chart was similar to, I guess, XOP. So let's see if we can get out of this. Maybe I can find that. Let's see. I think it's $ WTIC. This may turn into total crap, and it did. So here, oh, that's the, so that didn't work. Crude oil was, you know, strong. Let's just go WTC during that period. Yeah, crude oil. Those of you who trade crude oil futures will know it's, you know, only the only market that's more frightening than it is natural gas. But, you know, it had a nice move up, you know, and it, I think our peak in here was, you know, they don't follow in lockstep. I do keep an eye on it. And certainly, you know, I measure it if I'm looking to take a new position. I look at what crude oil is doing the overnight. You know, I follow the futures. Some of you may have been familiar with the work I do with the HPI, which is a indicator that uses price, volume, and open interest. If we go to crude oil, bear with me. The Herrick Payoff Index was developed by a guy named John Herrick. Had the pleasure of meeting one. Uses volume, open interest, and price to measure the money flow in and out of a commodity. I use it on crude oil, gold, pretty much, and the dollar to a certain extent. So, and this with the OBV. So this is a weekly chart. This is a continuous contract. Didn't look too exciting. Let's look at how the daily. That's so, you know, basically, you know, it was turning negative in early July, and it's still negative right in here. So that suggests that, you know, there's pressure on the downside. There's a whole lot of, I mean, I could spend an hour or two just talking about open interest in commodity prices, but some of you, you know, may not quite be interested. So this is a flag formation. Usually they're formed as a pause in an ongoing trend or a continuation pattern. So yields have been declining sharply from 3.2 down to, I guess, about 1.4 in the end of 2019. Started to rally. I pointed out this break. This is like a typical sort of bear flag. You know, it's like, you know, basically, you know, it's a pattern where all these people who are, you know, members, interest rates fall. That's good for bonds. So bonds were really ripping to the upside. So, you know, this pause here helped convince a bunch of the bond bulls that maybe interest rates were not going lower. So, and often, like, you know, this one uses a weekly chart. So like, you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, you know, 16, 17 weeks roughly it took, but it broke to the downside in January, you know, and that was a clear sign, okay, that the move lower in rates was resuming. You know, it's just a pause. So in a bull market, you look for a flag formation, you know, as being, you know, a correction, a dip to buy. We haven't had a lot of dips that have, you know, typical structure that we often see, you know, in the last 6 to 8 months. It's usually a very brief affair. I think it'll go back to the more, I mean, you know, we can look back at, you know, markets going back, you know, to the early 1900s, you see these flag formations. I think they're going to come back, maybe with a different character. So one of the questions people submitted was, well, what technical studies do you use to gauge interest rates? So, we move forward in time. So, because this is the yield, remember, this is the yield of the 10-year T-note. So as it's going higher, bond prices going lower. So, yields have been falling, once again, for about 16 weeks here, getting down to some support right now. The weekly MACDs, they turn negative here, and they are still negative. Okay. The 20 period yield is 1.40. So that's sort of the resistance level. If you look at, the daily chart, yields popped on Friday. So you can see made it right back up to the pivot. You'll see some people like on CNBC or Bloomberg said, we can't use technical analysis on yield charts and, other things. I missed that memo, but I do, and technical studies. So, this is a little encouraging. Is it enough to say, that yields have really bottomed? Not to me. I would rather see a move up, like maybe up into that R1 level and then a pullback and some time. Then that might suggest it. All the yield banks had a great day on Friday, as did value stocks. So it's possible that was the turn. To me, there's not enough technical evidence to suggest that. What you do see why pivots are interesting is, once you can see the MACDs were negative here, you start dropping below the pivot. So this pivot, in April, that was based on March's data, becomes resistance. May becomes resistance. And it just sort of gradually knows. So if you're beckoning back in here, you were not, you were looking for lower rates. Yeah, I mean, this sort of pattern. So it just tells you that that's, the pivot levels give you a unique, read on support and resistance. I think the chart I showed, this chart was pretty interesting based on when we broke out of that flag formation back in the end of 2019. You can see this was the daily chart. So we'd gotten up to the R1 in December, back down. January, we broke through the pivot early in the month. So then when you see that happen, you go like, okay, well, all right, just keep this bullish. You really need to see a sustained move back above the pivot. Instead, what you see when it's, a top is forming, you just see some chopping around. You can see we were up to the middle of January, and then we started to slide. February, of course, pre-crash, we got well below it. The pivot acted as perfect resistance, as it should, in early, March before, yields collapsed. And that's why it can give you an important read going forward on the market. Let's see. It's one other. I have a couple of other questions. I can get this baby to operate. I had a question on Zillow, and it was pretty. So I'd recommended Zillow. I'd seen some positive weekly action where this arrow was, so I was buying it right around 111.60. We had a run up to 111.24, which was a pretty nice push to the upside. I didn't, let's look at the technical studies. At that point in time, I thought we had completed this sort of bottom formation. We were above this support. The RS appeared to have bottomed to me also. So I was not, as concerned as I might have been. And I thought, I was looking for a pullback back into this 119.68 level from 124. Instead, we started to move around the next month in July. We were testing the pivot here and just gapped below it, stopping us out with a small profit at that point at 113.98, and turned out that that the decline wasn't over, and it certainly does not appear to be over yet, as this chart as of the 6th. So what happened? The OBV, et cetera. It broke support. And also the RSI dropped to new lows. So when I see something like a market dropping to new lows like that, I'm not interested. So Zillow is no longer on my watch list, and probably not. And of course on Friday must have had earnings because the volume here was huge. So you have to be nimble. Sure. I mean, I had I guess an $8 profit at one point. So almost 8%. That I do accept an 8% profit if I'm fortunate enough to get it. But usually my strategy is try to take over a 10% profit on the first half of the position, and then adjust the other position so I don't lose money on it. This one, I think I have to check my records, but I think we got stopped out of the entire position on this gap lower at one. My stop I think was at 115 something, 115. Not probably under this 16.1 low, maybe like right back in here. And in any case, did not work. So thoughts on Apple and China? Okay. Well, Apple, I'll look at Apple, and then I had a couple other things we'll do. So Apple, China, yeah, I been to Hong Kong and Asia many times. Can't figure out China right now about what the plan is. Usually those guys have their best interests in heart, and I can't make a case for that right now. So I'm not in any China positions at this point. So let the dust settle. There's too many. When you have global risk, and you have outstanding risks that haven't been resolved, it's usually not worth it. There's always a market out there that doesn't have the risk. So let's look at the weekly chart. Weekly chart looks pretty strong to me. So, it's a great fake out, this 144.41. That was right at earnings in January, I believe. So, it's just downward. Both earnings reports. Earnings were, if you ever listen to the guys on CNBC after the reportings, they had like 3-4 guys where, they were going like, well, 200's our next target for Apple. And, it's like, I can't believe these earnings. And, earnings and stock prices don't move together. Most of you probably realize that, if you take a really long-term view, you could make a case they might, but you can't buy a stock based on its earnings expectations, in my view. So that said, if we look at the chart formation, you sort of like you look at this sort of wedge here. So 144 to 118. So that's 26 points up from right around 35. So that'd still give you, a 61 target, which is not too far above here. Right now, we're just trying to hold supports. We have 4 weeks of sideways action, but the RS and the OBV, do look pretty positive to me. So that's a good sign, I would say. So we'll get out of those, and okay, let's save it, I guess. And let's go to a daily chart. So this, to me, based on that weekly, it kind of looks like we're building a flag formation. So the pivot's at 143.66, 142.33 and 141.46. If you look at this little low in here, 40.45, wouldn't want to see it get much below that. It's positive that the volume is sort of drying up here. Nothing really, OBV could have been stronger in that last rally. So I'd be watching this. If you always, as a technical analyst, you try to think about, well, what can happen on a negative basis? So suggest my view is wrong. So, if you're to see the OBV drop below this low and the RS start a clear downtrend, then, you might be thinking that, okay, we're going to go back to 136, which is the S1, 137. That's not going to change the weekly, but that's certainly, right in here, your disc. Conversely, if you get above 147.82 or so, that's going to look pretty strong. That's my view on Apple. Let's take a quick look at some of the advanced decline lines before these. So here's a bunch of AD lines, kind of give you a smattering. NASDAQ 100, clearly the strongest, followed by the S&P 500. Both broke out. So, when we started out, we had a video about is the market healthy? That was recorded right around in here in early, June, when the AD lines had broken out to new highs. Everything was pretty strong. This is the 1500. So this is a combination of the 500, the mid cap 400, and the small cap 600. It's not looking quite as great. You can see we have not made a new high. There's no real S&P 500, 1500 average. So you can't say there's any divergences. If you look at the downtrend here and it's getting close to being broken. Okay. So I'd really like to see it get convincingly above this peak and that peak to suggest its turn, but that's a possibility. Stocks only. Oh, this is missed. This is, okay. So this is incorrect. This is the stocks only, and this is the all AD line. Sorry, I didn't even read my own thing. So it looks the weakest, but the all AD line doesn't look a lot better. So, it suggests, choppy action, as another push to the upside. Sure. I mean, I would want to see us, break out above these highs and start a new uptrend, but that's certainly a possibility. You never say never, and you never say always when it comes to the financial markets. So let's see anything else I have to see here. More of the same. New lows, new highs, new lows, sort of a warning sign here. So if you get up new lows, surge much of above 100, that wouldn't be a good sign. Some different analysis of the same sort of thing. Mcclellan oscillator readings. We got really, McClellan oscillator does not always give you good divergences. It can give you some great divergences. So I keep an eye on it all the time, but it got down to like 291. This is based on the stocks only. This is based on all. Both got very oversold. If you look at this chart, you can see that was if you go back, instead of 6 months, you go back 2 years, you can see down in the minus 300. It doesn't get too much lower than that. We're down in March, it got to minus 400. So it tells you that shouldn't be buying puts there. Basically, is what it tells you. And and let's kind of finish up. I don't do much with seasonals, and this agrees with the rest of my technical stuff. But this platform, Trade Navigator, allows you to do seasonal trend analysis. This goes back using data, which you'll might find interesting. I always find interesting. So if you go back all the way, it goes back to 1930 to develop that seasonal trend. So, and that seasonal trend, shows you that, well, okay, generally, you stay up until, basically, see where my cursor date is here. So that's August 28th, 1931. So we're right in this period, right in here. It does suggest the pressure is going to be on, until you get, I wouldn't be on the short side until you get some real sell signals, but that shows you that, over time, it has had a pretty rough seasonal time, and, you go back and, to, whatever 80 years of market history, you can see sometimes it worked perfectly. This was whatever 43, had this great little pullback, like another flag formation, a pause in the uptrend, back up to the upside, market was already topping out in 46. If you look at like the big bear market of 73, 74. You can see that it actually topped out when it was supposed to be bottom in 73. Last push to the upside. And this was, you can see this was quite the move. This particular move drove probably a lot of our parents and grandparents out of the stock market for another 10 or 15 years. Well, great. Thank you all for tuning in, and we will put together a tape or video of this, and it'll be up on YouTube. So, and if you want to sign up and get on the list, then basically what happens is that we edit the tape and we put it up on YouTube, and then send it out an email subsequent to that, usually the same day, but sometimes the next morning. So if you want to do it, and there's some interesting stuff you can pick apart, and if you want to go to, if you want to see what past articles on Forbes, you can go, Forbes and my name, and you'll find. Now I put a lot of the articles up on Viper Report because of their pay policy, but there's a few of them here. And if you go to archive, it gets really scary because then they take you all the way back to everything I've done since January of 2011. Great. Well, hope you all have a nice weekend. Hope you found this beneficial. And I always look for your feedback. So when I ask you for questions, I'm getting some questions. Ask for questions. Please send them in. I didn't get too many this time, but I always try to answer them. I think I covered everyone's questions in this one. Thank you very much.